Hey guys, what's up? In this video, I want to walk you through how I made roughly $560 trading GLD credit spreads or gold credit spreads. Now again, this is a very simple and reliable strategy, but I want to walk you through my thought process and why I put this trade on so that you can understand it and do it yourself so that you can make money in the market trading credit spreads as well. So anyways, here we go. You can see here on my broker, Tasty Trade, that I put on these GLD spreads. I sold them on April 10th and I bought them back on April 13th. You can see here I got some partial fills to buy back on April 13th, but that's fine. You can see here I made a $630 profit, but then when you factor in roughly $70 in trading commissions and fees, that puts me around a $560 profit or somewhere around there. So that is the trade that I put on. And again, now I want to walk you through the chart and the reasons behind that trade. So if I go over here, this is Trading View showing GLD, which is the Spiders Gold Trust. Again, guys, this is kind of the reason why I put this trade on. If we're looking at it, you can see here that the market long term is kind of trading in a range. You can see here how we have support from 156 and then resistance at the highest point right here around, let's just be among average 188. Okay, cool. So we're looking at this trading range right here from high, low. So we know that we're trading in this range. We're starting to recover. We're starting to trend up. You can see here when we're trending up, what we do is we connect to these lows, and that's how we know we're trending higher. Okay, so we are in this trading range. We are trading higher, and it looks like we're forming a doji candle. So this is what I saw for the trade. I saw that the gold market was looking very strong towards this high. So I knew it had the potential to break, but I knew it probably wouldn't hold well. So I see that we push strong into this, but I don't want to try to push into it. I want to try to catch the dip to give me more downside protection. So I wait for it to sell off, and then I see a doji candle form. If you don't know what a doji candle is, that is right here. This means small body and long wicks. This is indicative of a stock reversing. So for instance, if it comes down and a doji candle forms, it means we're going to see a push up. If it pushes up and a doji forms, then it's most likely going to drop and continue down. So what I did was I saw that I'm looking for a push up to the upside because of the way that the trend is continuing. I saw a doji candle form, so I entered here on this red doji candle day. So I entered on April 10th right here. Again, I believe it was the 180. I believe I did the 180 strike price as my put credit spread. For those who don't know what put credit spreads are, it simply means that I put on a certain option strategy, which is called a put credit spread, where I make money in this trade as long as GLD stays above the price that I selected, which was 180, stays above this by expiration date. So again, you can see here it stayed above this, so I made money, but let me walk you through the trade specifics. So you can see here, again, I was indicating a bounce. You can see here the next day we gapped up and pushed higher, and the next day we gapped up and pushed higher, and the next day we gapped above this prior resistance that was made, and I was watching it looking for some more upside potential. But then you can see here that it just started to consolidate and show a doji candle for that day. Now what happens when a doji candle forms near a high? Well, it reverses back down to the downside, and since the credit that I could collect was about 3 cents, I just decided to close out this trade. I bought it for roughly 18, or sold it for roughly 18 cents and bought it for roughly 3 cents and was able to make that profit. And so again, that's where that profit came from, sold there, and the next day it just ended up crashing back down around that. Now again, you can see here this trade would have expired worthless because it stayed above this level, and so I would have made all the money regardless, but I sold early because it was only at 3 cents, which allowed me to take that money and reinvest it in another trade. Anyways, that was the reason for the gold trade, but the main reason why I found this gold trade and why I knew what to put on was because of this right here. Again, it is the 10% credit spreads trade ideas algo, which is what I put together after 5 years of trading in the market, which tells you and gives you stocks that have credit spread recommendations that have over a 90% win rate and at least a 15% return on capital. You can see here gold came up and tells you exactly what to do, the strike price, the expiration, and everything like that. I saw this. the math or the technical analysis made sense with the math. I put that trade on, and that's how I made around $550 in roughly 3 days. So again, if you want access to this, or at least let's say you don't even want access to this, but you want free trades from it, simply click the link below. You'll get access to this site, and you'll drop down and go here and say want to test our alerts, and you can get 3 free alerts. So anyways, guys, whether you sign up or not, you can get 3 free alerts right here. Anyways, I hope you enjoyed this video, and the thought process and the breakdown behind this. Put credit spreads are an amazing strategy for this market, and a way to make money while the stock does nothing, goes up, or even goes down a bit. You can still make money. Anyways, guys, if you enjoyed this video, smash that thumbs up button and subscribe button, and I'll see you in the next video.